SPX.com, and this is market recap for Friday, February 3rd, 2023. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes, your shares, your comments is what keeps this channel going. So please, if you have any questions or comments, make a comment on the video. Small caps are leading the stock market rally. This is a good news. I will explain why that is. S&P 500 possibly has entered a new bull market. I probably should put a question mark here. Junk debt, on the other hand, has indeed broken out, and I will show you what I mean there. Today, gold has dropped pretty strongly and dollar has bounced. I sort of predicted this last week, and I show you the price action that was predicted, and it's pretty much following the price action, and we'll see if natural gas has indeed bottomed. If you're a subscriber, stay tuned. You can see we have quite a bit of stocks to cover. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com and signing up. There is also a link in the description of the video. Let's get to it. S&P 500. So let's look at daily chart first. Okay, I always have questions. What is a daily chart? When I say daily, on TradingView, where I'm hovering, you see it says D. That's for days. So you can change the interval of a chart to pretty much anything you like. I normally look at daily or weekly, so 1 day or 1 week's worth of activity. So if you're using my indicators, then you can see that it says here for daily charts use 250 as length. See, there is a setting here, and for weekly use 52. Since this is a daily chart, we will use 250. Now, the stock market has come a very long way since October 13th of last year. There's a hammer candlestick. I already multiple occasions explained what that is. Suffice it to say that hammer candlesticks look like a hammer, literally, and I'm hovering over it. And if they happen in the bottom of a range, so this was a bottom of a range after a fall, usually they signify a bottom of some sort. Indeed, this is what happened. Stock market has started to rise. You can see on this chart we have my indicators with yellow, red, blue, and green lines. You can see that we have a breakout above this yellow line, and then we retested the same yellow line where I'm hovering on November 3rd and 4th, and then rallied with this gigantic green candlestick, green giant. We got to the red line. Now, when we were in a downtrend, as we were up until recently, when we are in the downtrend and the stock has rallied to the red line, we sell it short there. You can see a whole bunch of downward facing arrows. All of them did not really yield any meaningful movement to the downside, as opposed to, for example, these two alerts here in August and one in September, which yielded a very nice move to the downside. In this case, there was a minor move to the downside here in late December, but then we erased all of it and rallied up until yesterday. So looking at this chart, this is S&P 500 futures, continuous futures. Notice that what happened is yesterday the price has come up above this, towards this blue line, and so the blue line signifies an uptrend. When a stock closes above this blue support resistance line, we just say, okay, we're now in an uptrend. We should be buying the stock. We should no longer be selling it short or doing nothing. Now, notice on this chart for S&P 500 futures, we touched this level right there. If we look at S&P 500 ETF SPY, which does include the dividends, you can see that we closed above this blue support resistance line yesterday on the 2nd of February. So if we go by this definition, by this ETF, S&P 500 ETF with the ticker symbol SPY, I will say that we're we're now in a new uptrend, a new bull market for stocks. So a bull market for stocks implies new record highs. We're approaching record highs. They're not that far off. So once again, if we go by ETF, which does include dividends, we are in a bull market. If we go by the futures, we're very close. We haven't yet broken above it, but it does look like I guess in this case I would give the benefit of the doubt to the bulls, and I think I'm going to start treating this current situation as a new bull market. So looking also at S&P 500 on the weekly chart. So notice it says here W. So weekly just means that the prices are continuous, and then what we can do is we can divide the prices into time periods. In this case, weekly means that we have divided, in this case, futures prices from Sunday evening until Friday evening, and in this case, notice again we are very close to the blue support resistance line, and if we close above it, we're undoubtedly in a new uptrend. Now also, once again, as I said, the record, or rather the S&P 500 being in a uptrend or in a new bull market implies that we're most likely going to start hitting new record highs. New record highs are, not that far off. Previous record highs were set in January of last year, 2022. So if I am correct, then we should expect new record highs sometime in the not so distant future. Okay, so once again, S&P 500 ETF SPY has closed above the blue support resistance line, meaning that we're now in an uptrend, in a new bull market. Looking at the Dow Jones actually broke out into a new bull market even earlier, sometime in late December here, in mid-December rather. Notice that the blue line was pierced, and we had a close above it sometime here, for sure, right there in November 22nd. And then basically already we're seeing buying opportunities. Buying opportunities for an uptrend security is when it comes down towards this blue support resistance line, makes a bottom there. For example, we had this experience right there in January 20th, and then this is a great opportunity to buy because this is a lower risk entry. So Dow Jones is already in an uptrend, and it was the first of the major indices to enter the bull market. The only one that's lagging quite badly is, of course, the NASDAQ. So NASDAQ made a similar pattern. It made a new low here back in October, but it took much longer to go higher. And notice that we just broke above this red support resistance line. So red support resistance line in a downtrend is where we would think about selling short, but I just did not really want to sell short here, obviously, because everything else seems to be going higher. So bull market for NASDAQ is just slightly higher, just a few percentage points away. Excuse me. It is only like that much higher from today's prices. That's about 6% for NASDAQ. It's not really a lot. So, it's good news as well that pretty much everything is going higher. So there is no divergence. There is no bearish divergence. There is no, for example, S&P 500 would be going up, but NASDAQ would not be going up. If we look at the Russell 2000, so Russell 2000 is the small caps index. It also has broken out right there where I'm hovering on the 1st of February of this year, 2023. And this is so now we have the Dow Jones and the Russell 2000 small caps index. So small caps represent kind of like the economy, mom and pop shops almost, you can say. But I mean, small caps are pretty large compared to mom and pop shops. But it's a good sign when we have small caps participating in an uptrend, in a bullish market. It's up till very recently, small caps were lagging, and in fact, small caps were badly lagging up until quite recently, and they were the first ones to roll over into a bear market as well. So overall, a good sign that we have Russell 2000 breaking out into a new uptrend. Hopefully, we'll see NASDAQ follow up as well. Notice on this chart also we have two faint white lines. So these were my predictions. I drew them in here on November 25th of last year. Notice this bottom prediction just exactly came true, except for I thought we're going to collapse lower or move higher. So this was two ideas that I had. Overall, we did move slightly lower, but then we moved higher towards this blue support resistance line. And right now, it seems like the world seems to be, shrugging off negative news and worrying less about world coming to an end and concentrating more about potential for profit, actually. So risk is relatively low right now if we're buying Russell, for example, small caps. And overall risk, meaning in my definition of risk, meaning that how much are you willing to lose in case your trade goes wrong. So in this case, S&P 500 is approaching the breakout level, possibly already has broken out if it put in the dividends. The Dow Jones has already broken into a new uptrend, and NASDAQ is lagging slightly, while Russell also has broken out. So overall, we have two of the major four indices in a new uptrend, and S&P possibly also there. Important this week was that high yield bonds, this is JNK, symbol JNK, also have broken out into a new uptrend right there. So we closed above the blue support resistance line, meaning that we're now in a new uptrend for high yield bonds. As I keep saying, high yield bonds and stocks have a high degree of correlation, and it's also a good sign that in this case high yield bonds were actually leading the stock market higher. So bond traders, or in this case high yield bond traders, thought that economic conditions are going to be, I guess, improving. I'm not really, worrying too much about fundamentals of why things are happening. I'm just looking at the chart, and in this case, junk debt indeed was leading, and it's a good sign that we have broken out. And I think together, all of those signs, we have the small caps, high yield bonds, Dow Jones, all already in an uptrend. S&P 500 has possibly broken out, and NASDAQ also. It's approaching the breakout level, but not yet there. So overall, I think the picture for stocks has dramatically improved since even October of this year, where people, myself included, thought that the world could come to an end quite soon. The world could still come to an end quite soon, but I guess the chances of that, to me at least, appear less likely if we base our interpretation of the world strictly on stock markets. Now switching gears a little bit, we're looking right now at dollar currency index, DXY. So dollar currency index is currently in a new downtrend. We have entered a new downtrend for the dollar, where I'm hovering on January 12th of this year. up until very recently, we were in a huge, gigantic uptrend, which culminated here in September of last year, and then we were coming down since then. Now, we came down pretty strongly from September of last year up till now, and what I was potentially saying last week is that we're going to be bouncing. The dollar will most likely bounce into April, but then most likely will roll over. So why am I saying that? I'm basing this on the future projection of my indicator lines. So notice that basically I think that we're going to follow this red line into April here, and most likely will roll over sometime in April, and then continue lower. So many securities such as gold, commodities, oil, etc., have gold and other precious metals are influenced by the strength or weakness of the dollar the most. So it is very likely that gold will come under pressure. In fact, this is exactly what's been happening for the past couple of days. So we're looking right now at gold XAU divided by USD. So I just showed you USD, and so if we think about this equation, or rather fraction, gold on the top, US dollar on the bottom, if the bottom part is getting bigger, heavier, it's pulling this currency pair lower. So in this case, yes, indeed, XAU USD is being pulled lower. Last week, you can see that there's this projection for gold. Why am I doing? Why is this projection there? So again, it's mostly because the way I project the indicator lines into the future. And notice that into March and even into April, indicator lines are kind of coming down, so it is reasonable to expect for prices to follow. And indeed, that's what's been happening. In 2 days, we raised several weeks of up movement. So very short term, right now we are oversold for gold, and it's possible that we'll do like a couple of bounces. But I think it's reasonable again to expect gold will continue to possibly move either sideways or slightly down into March, April. But I think overall, bull market for gold has begun here on Friday the 13th, a few weeks ago, January 13th of this year. So unless we collapse from here and close again below the red support resistance line, which is not impossible, then I think sideways movement and then a rally towards new highs. I think it's reasonable again to expect this for gold. And looking right now at natural gas, so natural gas surprised everybody, myself included. I didn't know how weak it's going to be. I shorted natural gas myself. This is natural gas NG1 exclamation point. I shorted natural gas myself. Let me show you where I shorted it. I shorted it on Monday 19th of December. So I bought put options on UNG, and they did great. And then I sold out of my put options right there on January 5th. And I thought, I'm probably the smartest guy in this room. No, notice it continued lower. I sold out at like 370, and now it's 240. So where is the bottom for natural gas? Well, it's difficult to say. This is indeed unusual, I guess is the word, but we can look at natural gas on the weekly chart and see where is this going. So looking at the weekly chart, the price right now is let me see, it's like at the level of 2020, September 2020. So There is a lot of support here. I mean, it's like $1.80 or even $1.60 or so. But then again, I thought there was a lot of support around, where the prices are right now, $2.60. Looking at this weekly chart, there is also something of a potential exhaustion gap. So this is where I'm showing it right now. It's a partial gap, but nevertheless. So it's a gap between Monday the 23rd and between the last week and this week. So we can look at it also on the daily chart, but it's less obvious. Let me see, 23rd. So it's like, yeah, it's somewhere in here. But on the weekly chart, it's more visible. So maybe this is an exhaustion gap. If it's an exhaustion gap, right there. If this is indeed an exhaustion gap, then this week's, it's possible that this is the bottom. It's very difficult to pick bottoms, just like it's very difficult to pick tops. That's why mostly I trade based on my lines. And notice downward facing arrows here around the red line. This is a weekly chart. You can look at also on daily chart. It's more clear there. So there they are. Downward facing arrows following this close below this red line on 14th of November, 11th of November, right there. There was a rally. We touched this blue support resistance line but failed to close above it, and then continued lower on the 19th and 20th of December. So just, I just prefer to use the lines instead of trying to figure out where the bottom is. I mean, it does look like it's oversold for sure. I mean, it's very overextended. It's visibly overextended. But is it the bottom? Last week I thought we were approaching the bottom. Now I think we possibly have had an exhaustion gap. Maybe. I mean, the risk is low. Let's say we buy it Monday, and let's say price opens at the same level, and we put our stop just below the recent lows. Your risk is like less than 1%. So let's see what happens. Let's see if there is anything else. I think that's it. The rest of the stocks are going to be covered in the members only. So you can see I have Ethereum, NASDAQ. There's a whole bunch of stocks, municipal bonds, preferred stocks, also interesting. Real estate investment trust, mortgage real estate investment trusts, many of the foreign ETFs, and some of the big stocks like Cisco, Chevron, FedEx, Honeywell, Meta, big move on Meta recently, and some of the speculative one like Baidu, Alibaba, some of the Gap, Nvidia, Uber, and some of the gold stocks as well. You can see there's Hecla Mining, Royal Gold, and Eagle Gold Mines. So if you are interested in what I have to say, come to MasterChartsTrading.com, one word, MasterChartsTrading.com, click on sign up and sign up for one of my products. I have trading indicators, so these are these lines on the chart which you can use to trade pretty much everything. It's very easy to implement, and all you need is a free TradingView account. This is a TradingView.com interface where I'm hovering. So you need a free TradingView account, then sign up on my site. I will open the door for you, and you will see these indicators on your chart. Also, I have a newsletter, like I said. So a newsletter comes out every day. I send out alerts about things I'm looking at as far as stock market goes, and also a weekly members only video, and like I said, in the weekly video you can see there's a whole bunch of stocks we will cover and look at them. And if you are interested, I think the best deal is to get both TradingView and trading indicators and newsletters. So that deal is at $59.95 per month. Sign up for that. And of course, there's also VIP access. That's it for this week's recap. Again, please don't forget to hit the like button, subscribe to this channel, share this video, make a comment, ask me a question. Please don't hesitate. Thank you for watching. Have another great trading week. Bye-bye.